All right, mic check, mic check. We should be good to go. All right. Um, let's get into it. Don't really have anything. Well, I guess I do have some housekeeping. I kind of want to structure these videos a little more. Um, just to make them more useful to people. Uh, I think when it comes to trading, people can do a whole bunch of different types of TA, but unless you really organize it, and then once you organize it, form a system around it, which CryptoCred is actually a great resource to figure out what a good system looks like. But I think it's very important to understand, and I mean, he repeats in his video, his system is his system. It's what works for him. Your system is going to depend on how much capital you have, who you are as a person. I know it's kind of corny, but psychology is a big part of this. So who you are as a person, your risk tolerance, things like that. Um, your daily schedule, right? Some of you try and day trade, but like you have shit to do, and you're probably better off being like swing traders. And then some of you all probably just aren't that good at you know exits and entries, and probably just need to be position traders and hold like for weeks at a time. Um, so I'm gonna try and like do the organizing part. I can't develop a system for you, but I can tell you the important parts of technical analysis. Um, First is the trend, clearly. What direction is the trend going in? Um, and I'm not even going to say first. I'll say the first two are the trend and then support and resistance levels. Because different people, depending on how I feel, even in the day, um, I'll determine which one's more important. It just kind of depends on what side of the bed I wake up on. But understanding the trend and understanding where support and resistance um, are huge. And I mean, really, this we like to get fancy. We have indicators and all these oscillators and these moving averages, et cetera, et cetera. But at the end of the day, trend and support and resistance is all you need to trade. Um, so I will organize it by that. Uh, Everybody can tell what the trend is, right? Down, up, down. But sometimes it's kind of one of those things where you can't really tell until after it's happened. So we'll actually go over um, identifying the trend, right? So pretty much stopping in the middle of a trend and figuring out, okay, which direction are we going in? And that part can be pretty easy because if you just stop here or even here, you can tell we're going down. Once we break this low, and even then we'll talk about support and resistance where maybe you think of this as a pullback, but then once we break this low, okay, trend is down. So we'll talk about really like what you can do to identify where the trend is, really pay attention to it, um, and then identify like when it's over. I think that's also important. People can't really tell when a move is done. Elliott waves try to do that, but that's like fucking horrible. Don't love yourself. Don't use Elliott waves. Uh, and then we'll also talk about support and resistance. So just to really just jump straight into it, support. And you see how I start off with support and not the trend. It's just how I feel right now. So support. Um, Trying to get here. I think this is good. I think this is really good. So this level, daily support, or I'll just call it daily SR because it did service resistance a little bit. But here, support, broke it, traded in here, resistance, boom, broke it again, major disrespect here, resistance, dump, broke it, came back into support. So this is the perfect kill zone. Basically, when support or resistance flips to the other So in this case, we had resistance, flip to support. So where was it? It was resistance here, and then it flipped to support here after it broke it. So we break it here, and then boom, flip it to support. And then here, come back all the way into here. We trade below it, but close above it. Long entry, stop below this wick. That would have had you look something like this. Right, when you use the close above that line on the daily time frame. And then I don't know where your targets would be. Actually, we can talk about that now. There's a couple levels here. Actually, there's a lot. Trying to figure out which one to give you. So here's one. I think this is better. Boom, support. Boom, resistance. Boom, support. Boom, support. And then completely break it. And now it's almost serving as support again. To be honest, we could really, pull that down a little bit. So we're catching this wick. And you see, did we close above it here? Oh, we did. Look at this candle. That line is at 62.82. The close of this candle was 62.82.9. This is 62.82.8. Perfect. It literally closed like 10 cents above it. So yeah. So this is a level. So maybe shit, if you enter here, maybe you want to move your stop up below this wick now. Maybe you feel comfortable at this point in the trade. Another SR level. Let's see. And mind you, I don't have these planned out, so you really get to see how I think and how I'm trying to fit these lines. Basically, I'm trying to get a lot of interactions with this line. It's pretty easy right here. This is very blatant support. It's pretty much about which wick do I want to touch. All right, I think this makes the most sense. Here, resistance here, broke it, resistance here, boom, support here, boom, broke it, and then broke the support here. So actually, because this line last acted as support and then we broke it, or actually, it broke it twice down and then up, you'd probably be trying to take profit here. So to be honest, this is what a long trade might look like if you entered off the daily. The the risk reward is horrible. It's below 1, but that's just like one target. Maybe this isn't your complete target, but maybe it's like, okay, I do want to get out, and take some profit here. Oh shit, I just realized I chose the wrong tool. So actually your R is above 1 here. Yeah. Decent trade, not good. I mean, not the greatest. Depends on your system, what you define as good, but rewards greater than risk. The levels make sense. You're aiming for meaningful support and resistance. And maybe you take partial profits here and keep some of it open. Just because, maybe you want to shoot for more than this. And then that leads us into the last one, which is actually a weekly level. Or at least it looks better on the weekly. And it's here. We've drawn this a couple times on the channel. And so I'll go ahead and make that pink. And I'll keep it thicker just because it's just more meaningful. And that's weekly SR. Right. Weekly support, broke it, resistance, boom, broke it again. And this is where people are trying to enter shorts, right? If you look on crypto, Twitter, Discords, whatever, a lot of people are talking about the 6.8 range. Again, it's on the weekly, so it's not that refined. It's actually kind of like 6.7, 6.8-ish. But as a general area, they're talking about this line. And so looking at that, maybe you want to take profits here, but then also take some profits here at this level that makes sense. And you can see maybe even if I just make this visible on the weekly, and then if I do take this daily level and put it here, I think this makes sense too. Right? Support, resistance, resistance, broke it. Probably going to try and come up, treat it as resistance again. So this is a solid long trade. This makes sense. I wouldn't take it personally just because, like, I mean, the trend is down. You're counter trading the trend, at least the short term trend, which is clearly going down. I don't know how you argue against that. Short to mid term depends on what trading style you're using, if you want to call this short. But yeah, so this is the long op. This makes sense. And that being said, I will show you how, if you're not long already, how to possibly get long. And that's really just a simple fib. I'm going to turn the 38.2 on just because I think it might make sense here. So yeah, 38.2 is right where this is. You could try and shoot for a 50% retracement. That might be extreme. It just depends. What you have, and what I want to show you all, is this block right here. You have this block. Let's just make it pink. It was resistance. You can see on this 4-hour candle, we wicked through it, closed below it. We had this little shooting star here, but dang, I don't have it. Volume. It didn't happen on high volume, so it's not a valid shooting star. You should know this. You watch my videos. Volume validates the pattern. Here, and then we finally pushed above it, and we're kind of trailing off. And actually, I just deleted it. Let me pull it back. So we're increasing. Price is going up. Look at the closes of the candle. Price is closing at higher highs, but we're getting like shitty volume here. So you should expect some type of pullback or some type of down move. Whether you want to consider this like some type of flag maybe before we break this low, or if you want to consider, you know, we might have a pullback, whatever. But if you're not long, you couldn't get long from here, then the suggestion is, ideally, since we broke this level, hope that it holds. Maybe take this lower wick if you want. And then try and get long at like the 38.2. It's hard for me to pick an exact number. That's why I use the fibs, partly just because exact numbers make my life easier. And then maybe put your stop under there. And if you have volume profile, which I encourage, because whenever I don't have like a fancy way to determine a stop, volume profile is always useful for me. And I'll just put my stop inside of a low volume node right here. So there's two things. You can put your stop inside this low volume node, preferably towards the bottom end of it, because this is going to be Wick City. Or you can put your stop under this point of control. And that actually keeps you under 3%. I think this right here is a good trade. Oh shit, actually, damn, let me go back. So maybe even here, I know I say enter on the 38.2. Maybe you want to have one bid here, right where the point of control for this area is. Again, stop under here. Still keeps you under a 3% stop. And then you can actually have two orders. Have an order here where the point of control is for this like very brief range. Have an order at the 38.2, and then put your stop under here. And then that actually leaves you with the 50 and 61.8 if you really want to DCA dollar cost average down. But that's up to you. But yeah, so showed you the good long trade. And if you're not long, showed you where you might want to get long. The short trade obviously is hit this level. Um, let me grab this whole block right here, actually, so you all can see it clearly. We'll keep it pink. See, nice wicks, break it. Nice little wick right here, boom. So obviously the short trade is somewhere in this zone to short it, somewhere between 6-7, 6-8-ish, whatever. I don't know how you want to start building your position. That is kind of tough. I think here at this 61.8 line to start, it's kind of hard to see just because this line is in the way. 67, 63.1. So maybe you want to start building your position there, and then maybe have one at the 71 fib. Actually, it's not even a fib ratio, but don't sleep on 71. 71 is important. I don't know why, but you know, TA is not about like, can I explain why this shit works? It's like, no, it's pattern recognition, seeing what works. If you can explain it, that's like more power, but fuck it. And of course, your stop would be here, above previous support, above the wick of this daily candle, and it keeps you under 3%. This is a very high probability low risk trade, and you would actually look to maybe attack this level at least. So that's good, a decent R. You could look to attack lows. You could look to attack the bottom of this range, because at the end of the day, the trend is down, and we're looking for this support area that's been consistently holding up to give out, because support can't hold forever. Things have to break. And so that's really where you might want to start building a short position. And you can really even use confluence of other fibs. Or, other fibs. I mean, so you have a down one here, and then maybe you want to draw an up fib here. See where you have some confluence. Right around here, 61.8. It's fib confluence. Yeah, this area is perfect for a short, perfect to add to shorts. Makes too much sense. And if you get stopped out, you're not even mad because the trade made sense again. So what do we want to show you? Trend. Okay, so there's a couple of ways to identify the trend. So we talked, oh shit. I think I moved the screen. Wait, let me make sure the screen is still like visible. Okay, it is. So there's a couple ways to identify the trend. One are the weekly, not the weekly bands, because I think we're always below the weekly bands and we struggle to close above them. Yeah, the daily bands are good. So you can see during, I mean, this depends. During downtrends here, you can see we spend a lot of our time below the B-band median, and it actually serves as good resistance, good short op here. Boom. You can see during uptrends, we spend most of our time above the weekly B-band or the daily B-band median. Cool. Again, in the downtrend, we spend most of our time below it. And you can even treat this deviation above it as an overbought signal, short. Again, during bull trends, we spend most of our time above it, or bull moves, excuse me. And then now clearly we're below the trend, or below the median line. And the median line is starting to curve down. So daily B bands, and you can figure out what time frame works for you. That is one way to determine trend. Guppy is another way. On the daily, we've pretty much always been bearish, which makes sense because we're in a fucking bear market and we only get these brief glimpses of bullishness, which are really overbought signals. So maybe the 4 hour works better for identifying the trend, the short-term trend. So here, obviously bullish run up to 20K, mostly bearish. Had a little up move, bearish whole way through. Flash crash, and then kind of came up here. We're bullish for a decent amount of candles here. Sign of weakness, double top. Bearish all the way down, they never turned, green and blue. Bullish up here, double top again. There was probably some type of div here. Bearish, never turned bullish. Actually, they did briefly here twice. Overbought signals. Bearish, bearish. And then here we're just going sideways. And then here, bullish, bullish, bullish. This most recent run up. And now we're bearish again. So the guppy is a good way to tell kind of like what the trend is if you're not familiar. Gotta identify the trend. Very important. If you can draw a pitchfork on it, it's great. I can't draw a pitchfork on the current trend. I think the best one I can do is here. Sometimes you just can't do it, right? Sometimes the market is just too erratic. The best I've been able to do is this pitchfork, high, low, high, dump, with the 1.414 fib extension on it. And actually we're at the median now if you look at that. So short opportunity right now. Yes. Something special I actually want to show you all for trend recognition is using the Gann fan. I don't necessarily use this to trade, but again, just like identifying the trend, and you can actually get some signals from this as well. You can definitely get some signals from the bands and the guppy, but I just haven't talked about those. So the first thing you want to do is go to your settings. You can just right click on the axis bar and click lock scale. And that'll essentially lock price in place. So no matter if you zoom in or out, it doesn't auto adjust for you. And you can see in the bottom right hand corner, it turns log and auto off. From there, you're going to want to grab the trend angle tool over here, right under the trend line. Go ahead, put magnet mode on here. Go to the top of the move and then draw a 45 angle down or up, depending on the direction of the trend. But just make sure it's the absolute value is 45. If it's difficult for you to do, just drop it wherever, it doesn't matter. Go into the coordinates and then just set the angle yourself. Can't type. Cool. And then from there, what you're going to want to do is take the Gann fan, should be where the pitchfork is, and also where your fibs are. Gann fan, take that, draw it from that same top, and just align the middle 1/1 line with the 45-degree angle line. And just go ahead and lock it in place once you do it, just because it can be a pain. Lock. Or you can lock all your drawing tools with this button over here. Whatever. So this is a way to identify the trend. And there's two ways to draw this action. I'll show them to you. But essentially what Gann fans do, they tell you kind of like about the strength of the trend, where when it's really steep and you're inside this part of the fan, it tells you just stay short or look for shorts. And then the more you go over to the right, the more it tells you the trend is weakening. So what this is saying, essentially, this is actually a great trend line, just kind of naturally drew itself. Top, reach for it, couldn't touch it. Once price crosses the 1/1 line, that's essentially telling you start taking profits on your shorts or exit your short position altogether, depending on how you want to think of it. I think for traditional markets, the 2/1 line is for completely exiting your short or your short position. But crypto is just so volatile, you might want to do it in the 1/1 line, because by the time we get over here, you might have given back like 50% in profits by the time we touch this line. So you definitely want to use this in confluence with your support and resistance levels. But yeah, so this is a way to identify the trend. It's clearly going down, and then we use crossing the 1/1 line as a signal to close our short. We were looking intently here, didn't happen. Here, didn't happen. Here, didn't happen. And so now we're looking over here. The other way to draw this fan is above this high. It may be hard to tell if you haven't been looking at the chart, but this wick is higher than these, these two areas over here. So, excuse me. But you could draw your line there if you want. And then same thing, just align your line with the 45-degree angle. It makes more sense to align it further out, because that way when you kind of like go back in, it's more accurate, if that makes sense. Probably doesn't, but somebody out there understood. But yeah, another way to identify the trend, I mean, it tells the same story for the most part. We don't get that nice little resistance trend line here, but largely we're inside. I don't even know what fan this is. The 1/2 line. So this is essentially saying, like, stay short, look for short opportunities. And then once we cross this line, close your shorts or start looking at taking profits, because the trend is no longer in accordance with the fan. And the idea that Gann had with the fan is that price moves linearly to time. And so that's what this 1/1 line is. And that's why you lock your scale, because your scale kind of adjusts the x-axis depending on how zoomed in or out you are. But this kind of keeps it constant. And so the idea is that time and price move 1-to-1. And so the fan helps you like detect deviations from that idealized, I don't even know if that's a word, type of price action. And so once we deviate and cross above this line, you're going like, oh wow, price is supposed to move 1-in-1 with time. We've crossed the 1/1. The trend is starting to change, right? Because the only way the trend can change is if it crosses this line. And that's like the idea behind it, at least to my understanding. So yeah, that's one way to look at the trend. And then of course you all know that I like to use the 12 and 26 EMAs. On the 4-hour, they've been very good so far, or recently, not so far, recently. Support appear, deviation, sign of weakness, resistance, resistance, resistance. And now we're actually inside of them again. So maybe I want to put my short stop above them, because once we disrespect this line, then I know things are bad, right? Same way when we disrespected the support, when they were acting as support up here, then that let us know kind of early on things were bad. And that's the idea. I guess the very last thing I'll say is looking at the daily time frame. If you're looking at this line, let's make it orange. Here is the low of this range before the pump, and we haven't touched it. Liquidity. Oh my God, I can't spell. I did this yesterday. Liquidity under here. It's very hard for me to believe that we just form a higher low without taking some stops. And if we don't take some stops under here, I expect us to return to it eventually. So even if we do kind of bounce up here, I eventually expect to trade below this line, even if it's a wick. It's just very hard for me to believe we form a higher low without searching for new buyers below here, or people covering their shorts or covering their longs. Wait, that's that right? Yeah, because there's long stops. People who are long have stops under here, so covering their longs. Yeah. So without either stopping people who are long out or just finding new buyers at lower prices, it makes it very hard for me to believe that we just bounce and form and break this high and make our first higher high on the weekly time frame. Because that is something I want you all to be very aware of. how when you're looking at the closes of the weekly candles, lower low, lower or high, lower high, lower high, lower high, lower high, low, lower low, lower low, lower low. And now we're looking to see if we break this low, which I mean, I have confidence that we will, but I'm not like betting the bank on it. It just depends. And this is the weekly candle. It's Thursday, so we have Friday, Saturday, Sunday, 3 more days until this candle closes. Oh wow. Oh, this just started yesterday, so this actually has today too. So I mean, this isn't abnormal either, right? We had this long lower wick here, and we still had 3 more days of dumping. So we'll see what happens here. But the 3-day definitely looks like it's about to be some type of hammer. Depends on the volume. Yeah, it's going to be good volume here, especially since there's a whole another day of trading. This actually opened on the 8th. So yesterday, so the 8th, and now the 9th. And so it's 1 more day. So about, you know, so 9:30, 22.5 hours left for that 3-day. And the weekly, of course, gonna look like it has like a good little lower wick. But again, we have to see how this closes. It's kind of reached through all these areas of demand. And I guess the last thing real quick is just a very short-term outlook. I wanted to show us at the beginning of the video. I think we already dropped if we didn't. I guess just paying attention to this higher high, lower high on volume. So this is a volume div. Very simple. All it means is we're making higher highs with less buyers, which is the definition of overbought. Smaller candle spreads, as you can see, because this up move had a larger spread than this up move. Yeah, Stoke, very bearish. So I think it's very important for you to internalize what this is. RSI is trying to convey the strength of price. So stochastic RSI is trying to convey the strength of RSI. So this is a second derivative from price, a first derivative from RSI. So when the stochastic RSI is bearish, that's showing like the RSI is bearish, right? So the RSI for the daily is clearly under 50, but the stochastic looks like it's about to cross up a little bounce up. So to me, that means RSI is about to bounce up a little bit, which should let you know, okay, price should bounce up a little bit. Like that's how you think of it. And then you look for maybe like the last support. I mean, you can very much treat oscillators like price sometimes. So you can look at this last support, and you can also look at this resistance, and you can basically look for when RSI touches its resistance level, and then look for the stochastic RSI to start turning down, because that lets you know RSI is about to give out, and then that lets you know price is about to give out, right? So either support turn resistance, or the previous resistance. I mean, it just depends. And yeah, so I mean that's that. Yeah, pretty much it. So appreciate y'all. Yeah, share my videos please on Twitter, Discord, Telegram. Tell a friend, tell a friend, tell a friend. For sure. Appreciate y'all. So see y'all later.